All right. I was talking about Netflix, whether buying the dip near the lower Bollinger works on a daily chart, right? So we have to mix it with other studies. In this case, it worked because the momentum was still bullish. Momentum was above the zero line. Here it worked because it was above the zero line. But in this case, you bought the dip, when to hit the exit button when it starts closing below the lower Bollinger and the squeeze starts firing to the short side. Now quickly switch over to puts. At this point, maybe you would have made a loss because the calls did not work, but puts would have worked after a certain point. Right, that is where we need to be careful. And here, the first test of the lower Bollinger Band, there was a bounce. And how many points was it? It went from 955 to 1000. $50 is fairly significant, right? So this is one way where it went from upper Bollinger to lower Bollinger. You took the bullish position, but after consolidation for some time, it caved in. So the second test or the third test need not work, but the first test is maybe a good, or I will not even say maybe. First test in a bullish stock is always a buy, right? So let's see in the recent times what happened. It has never even come to the lower Bollinger. Just a couple of days ago, it came here. There is no squeeze, but it still fell further, right? So in this case, it did not work. But what is the clue here? Slightly above the Bollinger Band itself, it was consolidating and it caved in that case you need to be careful. Imagine a squeeze here, although there is no squeeze. You can see the Bollinger Bands contracting. Maybe it was not contracting enough to produce a dot here. you know, that was the only difference. So any questions on this? If not, I will move to what I wanted to show regarding the levels that I publish every day. And I'm pretty sure, if we do a similar analysis on the levels given by Nick, it would be pretty much same kind of result. So what is happening here is I have taken about a month's data and I have the levels here that I have given and I have noted the distance. And usually the average distance is about 62 points. All right. So that gives you a good indication of how I'm structuring these levels. And some of the bigger numbers that you see here would be the extreme points. Upper, on the upside it is the fourth level, on the downside it will be the fourth level, where you have more than 100 points. To make sure I cover some catastrophic uh, pullbacks in the market or some news based events even on the upside. So I what I did is, first of all, I want to, let me see if I can bring up a whiteboard. um, I haven't used it in a while. Is there an option within the meeting to bring up whiteboard? Okay, I don't see any. That's fine. Prob
Is there, Pradeep, if you click on more, there's a whiteboard.
Okay, let me try. Hmm,
Maybe stop sharing and you might see it.
You can use Zoom's whiteboard.
Yeah, I'm talking about, yeah,
Yeah, this
Zoom.
is Zoom's menu, but I don't see a maybe because it's the free version, they haven't enabled it here.
No, mine's free as well, so I don't know.
That is fine. I'll use a
You
blank
can
sheet.
take a MS Paint, Pradeep, like that's easy.
Yeah, that's fine. I'm going to use this blank sheet, and what I can do here is I'm going to use this demo pro. Line would be command one. All right, control one. Sorry. So and what can I use for typing? Free text, freehand. Okay, so this is key zone, right? There are two levels here, and then we generally give level 1, level 2, level 3, level 4 to the upside, and 1, 2, 3, 4 to the downside. 1, 2, 3, 4, 1, 2, 3, and 4. So always what I say is when the index is trading above the key zone and it comes and visits the key zone, then it's a buy. You need to be bullish. But if it breaks the key zone, then that is the time to get bearish. But there might be certain scenarios where index is trading at, oh, I should have written it in another way. What is erase here? Uh, made a mistake. So sorry about this. I'm going to scratch it. Ignore this. I should have written 1, 2, 3, 4 in reverse order here. Right. Okay. So when the index is trading near the fourth zone and say it falls by one level, is it a buy? That is what I am analyzing here. One level buy, you know, or it is trading at the third level, it comes down to second level, is it a buy? Same with 2 to 1. And what I mean by two level buy is it is trading at the fourth level, it falls to second level, then is it a buy? And so on. You get the idea, right? And if it is, if it is four level buy, it could even be falling from uh, number two all the way to the lower key zone. This is also considered a four level buy. And five level buy is similar, where it probably starts from here to here, three level to the key zone, right? And you get the idea. On the opposite side, I need not explain in detail. One level cell, two level cell, three level. I have taken five levels. That means it is already trading somewhere here and it bounces up two levels from here to here, that is a two level sell. And remember, this is done, you know, when the market has been fairly bullish, right? But even then, what we have seen, we have mentioned that in the group as well, most of the drops have happened overnight, and when you wake up in the morning, market recovers by the time the real trading session starts, right? So even the shorts would have worked, but unfortunately it happened during nighttime where we cannot take much trades. um, so I have considered data throughout 23 hours when the market is open every day. Okay, so any questions on the way this analysis is done, and any questions on what this means?
Pradeep, I'm little new to the group, so I don't like quite understand when you post it. Main thing is you said that it becomes buy when it goes down, like from 4 to 2. So I don't understand that part.
Yeah, so above the key zone, we have to be positioned in a bullish way. Okay, so every day I publish levels saying this is the key zone, and if index is trading above the key zone, we need to be bullish, but we have to wait for certain good entry points, right? We have all seen when you chase what happens. Market can drop and you will book a loss and then it will again go up. So to avoid that, what I'm saying is, if it drops by one or two levels, then it is a buy, and then we will look at how it worked, or whether it worked or not. You know, I'll go through these results, but that is the general idea. When it is above the key zone, you look for bullish opportunities, and when it is below the key zone, look for bearish opportunities. And also, when it is uh, somewhat counterintuitive, is where if it is at the fourth level, is it a good place to is it a good place to short? The answer is yes, it is a good place to short, but don't look for more than 50 points or the next immediate level. And when I say here whether it worked or did not work, what I mean is whether yeah, you shorted here at the fourth level, um, and it fell to the next immediate level, then our task is to book profit. Immediate level or 50 points, whichever comes first. If the distance between these two is maybe 100 points, don't wait for 100 points. If 50 comes first, take the first 50 points. Okay, that is what this analysis is about. Any questions?
Okay.
I think there is only one observation I find is you don't wait, put an order in there and get out. It comes to your order and you're out, you're happy.
Yeah, definitely. That is one way to automate it, right? If generally, if we keep looking at the markets, we tend to take impulsive trades. We might be chasing it, or we might be shorting it at wrong levels. After the analysis that I just showed, right? After it makes two standard deviation move, three standard deviation move, if you go ahead and short it, it's not going to work in your favor at all. Now you need to wait for a bounce. Even if the market is bearish, you need to wait for a bounce for you to short, right? So that is what this analysis is about. Once it breaks the key zone, you look for bearish trades. Maybe, let's take an example. It broke the key zone. it went all the way to the third level. Now, can I go and short it here because now the market is bearish? It is not going to work, you know. And that is what this study is about. If you have bought it, even after three levels of drop, when it is below a key zone, it would not have worked. You know, you need to wait for a bounce, maybe put an order here, or one contract here and another contract here, and look for further downside. You know, that is what I have done the analysis here. So let's take a look at the results. It was a lot of data to see, and obviously there is no way to do this in a mechanical in an automated way, so I had to do it manually. So the total signal it generated is 243 in less than a month, which is huge, right? um, I mean, if we get 243 trading opportunities, that is huge, but we need not take everything. Let's look at what worked and what did not work, right? So the buy signals, generally with one level drop, you see the percentage is pretty low. But you buy it on a drop of two levels, it works fairly well. Three levels, it did not work because generally the trend changes at that time. Maybe it will continue to drop after it passes three levels. um, that is what I have seen even in this one. The trend changes, and this was a bullish market. Even after four levels, you know, the shorts did not work, and at the fifth level it worked. So the win percentages are all very, very encouraging. You know, more than, I would take anything which is more than 50-60% chance of probability, right? um, but the key here is, how can we minimize our losses where it did not work? So earlier I used to say have two level stops. Now I am thinking twice whether that should be the case. After looking at this data, two level stop will probably bleed your account. um, Instead of that, if you look at these percentages where it did not work, it is about 32%, right? 100 minus 68, that's about 32%. So where in 32% of the cases it did not work, but I looked at some more data. If you have a stop loss which is at break even, you can push this up to almost 80%. And same case here. In 30% of the cases it did not work, but if you have a stop loss at break even, or you know, for the effort that you put in, maybe take 10 points of profit, which is about $200 in NQ, or $20 in MNQ, right? So if you do that, this can easily, all of these will go close to 90%, and this is anyway at 100%. So I need not do any more analysis here. After the index dropped by four levels, if you had bought it blindly, it would have worked. Same case today, probably. All right, let's take a look at today's data. uh, let's what was the level I had provided? And I'll go to NQ here. And remove all studies. And I want to remove even these. I think this is where I had done some analysis for earlier levels that I had published. Right, so I'm going to I will probably just remove all drawings. Um, okay, so 15-minute data, and I published today's levels at 9:30. So I would like to do just 1 day worth of data analysis, and that is pretty much the same way I did it for all other days, just to give you an example. Okay, so the key zone here is 465 to 520, 23, 465 to 23, 420, sorry, 520. Oh, sorry, I should have done it from here. 9:30 is here, right? So I'll do it from here. 465 to 520. This would be 520. I'll make it solid and red, and here I'll make this 465 solid and red. So this is the key zone for today, right? And then 4 levels, 564, 620, and then 715. And I really like the script that Kalyan provided in the group. I I started using that on a regular basis now. So we need not do this manual work. It automatically draws these lines. 405 and 330. It never went there. But anyway, I'll still have it. I'll not draw the other lines because the price never reached those levels. So 330, and this one is 405, and this is 64, 620. Bear with me while I do this. Will not take more than a minute. 715, and then the last one is 770. Okay, so here, if we look at this and see how we need to trade, right? This morning, this is inside the key zone is pretty choppy. You should know this, that this is also a chop zone. So be very careful if you're trading here. And it is okay to trade, but you need to take quick profits, you know. So inside the key zone, look for one level buy and one level sell, and you will get plenty of opportunities. That's what happened here, right? You, when it hits this, you short, it comes down here, then you book your profit, again go long. But if it closes below, then exit. With a small stop loss, you can trade around these key zones. But generally, you're if you can please go on mute if you're not talking, that would help. Let me see if I can mute everyone. Okay, I think everyone is now muted automatically. So when so this is when the Fed announcement happened, right around 1:30. So it went up, came down. See, it never closed above this level. So if you had shorted at this level, your task is to book a profit when it hits this. And remember, this is from 564 to 520. So less than 50 points, right? So you have to take a profit at the next immediate level. So that would have worked. But say if you are, if it went quite a bit to the upside, right? It broke this level. It looked as though it broke this level. And if you had gone long waiting for it to pull back to this first level, you have a one level stop and you will be out. That is what I would recommend. One level stop. You make a profit, it is one level. You lose, it is one level. I don't recommend doing two levels anymore. Um, After doing this study, what I have seen is one levels are better, and also having a break even price is also very, very important. Now let's look at where it went, right? It passed through this, number one, passed through this, two, passed through this, three, and it passed through this. Four levels. After four levels, if you buy it, what is the probability of it working? At least in this bull market, every time it has worked. Five level buy, every time it has worked. And when what I mean by working is it can continue to go down, but at least you will get this occasional bounces which will help you to exit. That is what happened here, right? You buy here, you will get an opportunity to exit at this level. See how well these levels have worked, even in a volatile day like this. And if you, and again, mix it with other things. I have taught how to read market internals. And even if you felt like chasing after it went up like this, see, wait for a pullback and then target the next level. It is still working. Right? So the point is, once it crosses a certain level, I wouldn't call this a break, crossing the level, because it closed below this. I would consider this candle as a real breakout candle. It broke above this level. Now don't chase it. Even if you want to go long, what is the level here? 715. Right? So don't go and buy it at 740. Instead, wait for 715. And your chances of this working is very high. And once the price moves in your favor, have a stop loss, maybe a 10-point stop loss or a stop loss at break even. I will leave it to you. If we do that, we can easily push this close to 90%, which is amazing. And if you're at the levels that I use, these levels myself, and if you have even a little bit of trust in what I publish and what Nick publishes, uh, you know I think this is a solid analysis of how you can utilize the data. Obviously sell side is fairly low, because it has been a bull market, but not bad, considering that at least four of these, one, two, three, and four of these are still at more than 60%, which is huge in this bull market. And if it is a bear market, you can imagine how it will be. So the levels are working. I use it myself, and this is the analysis I did where it did not work. If you consider 2 point stop, your losses would be pretty huge because the average points is 62. And if you consider 2 points, sorry, two level stop, meaning, say, let's take an example. You shorted it here, or I'll take this level. You shorted it here and it went up 2 levels, then you're booking your loss. And that loss will be significant, right? From here to here, it would be significant. So I no longer recommend that after looking at this analysis. Have a one level stop. If it works, it works. Otherwise, have a stop loss. In many cases, price will come back, right? If you look at this, you short it here. If you had shorted it here, it went all the way here. Obviously, we should have booked the loss. But say it is FOMC day, you are hoping that it would go and hit the next level. There's no harm in waiting for 2 levels, but at least have a stop loss right around this entry point, or slightly below that, which will ensure that your capital is protected. Here it would, although it did not hit the second level, at least you would have exited at close to break even. Any questions? We have 5 minutes left.
This is all valid on 15-minute time frame.
Sorry, say that again.
Is it all valid only on 15-minute time frames?
No, any time
Or
frame, because here the time frame doesn't matter for these levels, because the levels will remain the same, right? Whichever way you look at it, the levels will remain the same.
Right.
It's constant.
Then, like someone like me, we're not allowed to trade futures. Any other,
You
like, can we
can,
use an
yeah,
NDX?
you can use QQQ options.
Okay.
Um, you will get more bang for the buck if you use 0 DTE, but obviously we will not have these many signals, 243 signals, because during night time it will not be there. Only during market hours you can still trade it.
How do you correlate NQ to QQ in terms of?
Just exit at market price, looking at these levels,
Okay.
and enter at market price. QQQ is fairly liquid. Um, you might be paying maybe $5 extra here and there, but if there is no other option, if you are not allowed to trade futures, I think that is what you should do.
Mm.
Pradeep, should we look at Lulu and UNH, or it's too much?
Yeah, I can. Let me go to.
Like how much further it's going to drop?
Okay, let's take a look. Lulu and change to weekly. Yeah, look at this 198. I think it is definitely going to break 200.
Okay.
If it bounces here somewhere close to 200, it is only to trap more bulls, thinking, oh, it did not break 200. Let me at least buy it at 205, and then someday it is going to break 200. So definitely don't buy above 200. And ideally, I would say this candle here, what is the low? 177.77. Somewhere close to this bottom is where it is a buy, around 185 and below. Which is the other ticker you mentioned?
United, UNH,
UNH, I had given, I think,
240.
233 as the price.
Yeah.
Um, so yeah, it is coming down. I think Akshay and I are in some other groups where there was some discussion. Oh, it went all the way to 329. We missed the boat. I said, no, it's going to come down. Don't worry. So that is what is happening. I think, again, if you look at this candle where it started, that is the place to buy. So anywhere, I think slightly now that it has taken more time, it might not be 233. I think we have to target somewhere around 240. Anything below 240 is a good buy.
So if I have UNH at a higher price,
Hmm.
do I just wait and hold the capital until it comes to this point, or I should like buy one, two at like these, like 284 was once one place where I bought a few, 274 I bought a few, 261 I bought a few.
Yeah, there's no harm buying at certain levels, but make sure you buy more below 250. Um,
250. Okay.
yeah, I think it is not a bad company. So I think fairly.
Yeah, every guidance that it has received is over 300.
Yeah, right.
Is it mainly due to Amazon getting into this thing?
No, it's about somebody. I mean, it's a legal cases against it.
Yeah, some Medicare fraud or something, they're
Yep.
being investigated. There's less than 1 minute left here. So I think if
Yeah.
we have more
Thank you.
questions, let us rejoin or we can end it here. Are there any more questions? I see some in the chat.
Pradeep, can you cover commodities, please?
Okay, and then let's rejoin the same link. Okay.
Okay, thank you.
I'm going to stop the recording.